In the glittering world of cryptocurrencies, the breathtaking highs often overshadow the harsh reality of sharp falls. Yes, the prospect of financial gains can be alluring, but we can't ignore the flip side, the very real risk of crypto bankruptcies. Today, we delve into this less glamorous side, exploring some notable crypto bankruptcies and their impact on the industry. Welcome to Bitcoin Scramble, your go-to source for everything related to the fascinating world of cryptocurrency. Brought to you by B2B InPay. Despite its relative infancy of just 15 years, the crypto market has morphed into a mammoth, a trillion-dollar juggernaut. But with great size comes great risk. Unlike traditional banks, where the Federal Deposit Insurance Corp, FDIC, steps in when things go sideways, cryptocurrencies offer no such safety net. This lack of insurance makes the sting of crypto bankruptcies all the more painful, a cautionary tale for all of us. So, what happens when the dream of digital gold turns into a nightmare of digital bankruptcy in the crypto world? To find the answer, let's look at 5 most significant bankruptcies that have rocked this market. In the high-stakes world of cryptocurrency, no company is immune to the risks of cybercrime. The tale of Mt. Gox in 2014 paints a vivid picture of this threat.
Mt. Gox, the Tokyo-based Bitcoin exchange, has filed for bankruptcy protection. The announcement comes days after the exchange announced that as much as $450 million of the virtual currency had gone missing. CEO Mark Capelli's apologized and bowed deeply on Japanese television. It remains unclear if the missing Bitcoins were stolen, voided by technological flaws, or both.
The company first felt the icy grip of cybercriminals in 2011, when stolen credentials allowed hackers to divert Bitcoins into their own wallets. In the same year, a flaw in the firm's network protocol led to the theft of thousands more Bitcoins. But these were merely tremors before the earthquake that would hit in 2014. In a crippling cyber attack, the company lost a mind-boggling 850,000 Bitcoins. This was the final blow that pushed Mt. Gox into bankruptcy. The aftermath was a frantic scramble to recover the lost coins. Authorities intervened, and Mt. Gox managed to retrieve 200,000 BTC. In November 2021, the company devised a reimbursement plan to repay some investors. But the damage was done, and for most investors, their funds remained lost. The year 2019 delivered another chilling tale from the crypto world, this time in the form of Quadriga CX, a Canadian cryptocurrency exchange. In December 2018, its founder and CEO, Gerald Cotten, died abruptly while in India, falling victim to complications from Crohn's disease. The tragedy took a severe turn when it was discovered that Cotten was the sole keeper of the access keys to the exchange's cold wallets, which held the lion's share of Quadriga's crypto assets.
And along with his death, the problem here is also access to his laptop, and that laptop contains the $250 million, thousands of potential Canadian accounts there, and they all might be gone for good. Now,
even before this unfortunate event, the company was already in financial turmoil. With the wallets now locked away, the situation spiraled, leading Quadriga CX to file for bankruptcy on February 5, 2019. The company's liabilities at the time were massive, owning customers a staggering $190 million in various forms of currency. Following the bankruptcy announcement, the exchange hit the emergency brakes and froze all customer accounts, leaving them stranded without access to their funds. As the bear loomed over the crypto industry in 2022, no tale of woe was more pronounced than that of FTX. A formidable titan in the world of crypto exchange platforms, FTX stood among the top 5 in trading volume. However, the tides turned drastically as the company found itself on the verge of liquidation, finally succumbing to bankruptcy in November 2022.
The crypto company has been gating international withdrawals after allegedly mismanaging clients' assets and transferring some of those to a sister company, Alameda Research.
The initial tremors that led to FTX's downfall were felt when a report emerged revealing issues with Alameda Research, a trading firm intricately linked to FTX. The revelation exposed Alameda's staggering debt profile of $8 billion. along with its equity in FTT. This news led to a swift reaction from Binance, which hastily offloaded its FTT assets, sending the token's value into a tailspin. Investors, smelling the storm on the horizon, raced to withdraw an astounding $6 billion in just 3 days. This sudden run on the bank only intensified the crisis for FTX. Unable to meet the rush of withdrawal requests, the company was pushed into a corner and had to file for bankruptcy in the US. As per the bankruptcy filings, FTX was in the red to the tune of $9 billion, with over 1 million creditors left in the lurch. In early 2022, Three Arrows Capital was sitting pretty at the apex of the crypto world, managing an impressive $10 billion in assets. As one of the leading crypto hedge funds of its time, Three Arrow Capital was considered a heavyweight. But the tempestuous crypto bear market of 2022 had other plans. A liquidity crisis sparked by market volatility forced the fund into bankruptcy in July that year, reporting an alarming debt of $3.5 billion. This crash didn't happen in isolation. It echoed through the crypto landscape, causing substantial losses for numerous companies.
We just got some breaking news right here that Three Arrows just filed for bankruptcy. Kate, really quick, your take on that?
A big deal. I mean, I think it was expected in many ways. This was an established hedge fund in the space that's faced a lot of margin calls that it has failed to meet. It has been one of the reasons why companies like Voyager, BlockFi, and other counterparties in the lending space have faced so many issues. I think this was expected and the likely outcome. There were not many alternatives here.
The main culprit behind Three Arrow Capital's downfall was the implosion of UST, a widely traded stablecoin at that time. As the value of the project plummeted to nothing, the $500 million invested by Three Arrow Capital evaporated. Further blows were dealt when the prices of Bitcoin and Ethereum took a nosedive, exacerbating the firm's losses. The endgame arrived with Three Arrow Capital's bankruptcy filing, leaving an aftershock that shook major crypto players like Blockchain.com, Genesis, and Voyager Digital.
Crypto firm Genesis preparing to file for bankruptcy. This move comes 2 weeks after Genesis laid off about 30% of its staff as the crypto industry struggles to bounce back after the fallout.
Genesis, once celebrated as one of the leading crypto lenders, fell on hard times as the harsh after effects of 2022 seeped into the following year. A subsidiary of the Digital Currency Group, Genesis began 2023 on a somber note, declaring bankruptcy in January and promptly presenting a bankruptcy plan. The firm's financial misfortunes were significantly compounded by a default on a loan from Three Arrows Capital, which itself had gone bankrupt in July 2022. Things took a turn for the worse when Genesis's business associate, FTX, along with Alameda Research, collapsed. This sequence of unfortunate events led to a striking loss of over $175 million in Genesis's assets, leaving the company incapable of fulfilling redemption requests from its customers. These stories serve as stark reminders that the world of cryptocurrency is not impervious to the risks and challenges that traditional businesses face. This is why it's crucial to stay abreast of the latest developments in the cryptosphere, allowing you to make informed decisions in an ever-evolving industry. That's it for this week's episode. Thanks for watching. Don't forget to subscribe to our channel to stay informed and up to date with Bitcoin Scramble, brought to you by B2B InPay.